Hello friends, in the series on the income tax cases, today we will discuss a very important case which is based on the question that if the notice under section 148 is issued to the assessee on a wrong presumption that the assessee has not filed the return of income while in actual the assessee has filed the return of income, so whether in that case the whole assessment proceeding should be quashed just on the basis that the notice has been issued on incorrect facts. This issue has been taken up by Chandigarh ITAT B bench in the case of Income Tax Officer versus Taj Land Developers and Promoters Private Limited. This case is reported in 128 ITR Tribunal at page number 167 and the date of the judgment is 22nd September 2025. The present case relates to the assessment year 11-12. The assessee has filed the return of income under section 139 by declaring an income of rupees 44,940 rupees. The AO has the information through AIR that the assessee has purchased a property of rupees 4.4 crore rupees, and since the assessee has not filed the return of income, so this income, the income to the tune of rupees 4.4 crore has escaped assessment. The assessee challenged the notice, raised the objections, but the objections were disposed of in a very arbitrary manner and the assessing officer made the addition of rupees 4.4 crore. When the assessee filed the appeal before the CIT appeal, it is the main contention of the assessee that the whole assessment proceedings are bad in law because the basic structure of the proceedings, that is the presumption that the assessee has not filed the return of income while in actual the assessee has filed the return of income, is incorrect. So the whole proceedings should be quashed. The assessee was also contesting that when the approval was taken from the approving authority and when the approving authority was apprised the wrong fact that the assessee has not filed the return of income, so how it can be said that the approval is good in law, or in other words the approval is, why not it is mechanical. The CIT appeal well appreciated the ground of the assessee and quashed the assessment proceedings on the basis of incorrect facts and on the basis of mechanical approval. The revenue filed the appeal before the tribunal, and when the tribunal heard the matter, the tribunal said that the opening line of section 147 says that when there is reason to believe with the AO, only then the assessment proceedings under section 147 can be completed. In other words, the AO should have the information which has a direct live nexus with the formation of the belief that the income has escaped assessment. The tribunal said that in the present case, the facts are very clear that the assessing officer has not applied the mind to the information which was with the AO, and the notice has been issued just on the basis of the AIR. No verification was done and the notice was issued just to make the roving inquiries. The tribunal said that if the AO has assumed that the return was not filed, then this would be the case of incorrect formation of belief, and the AIR information give only the power for setting the machinery into the motion, and it is the independent application of mind of the AO which is sine qua non for the proceedings under section 147. The tribunal said that in the present case, the assessing officer did not verify the information and treated it as a gospel truth, which is not at all permissible under section 147. The tribunal said that in the present case, when the approval was taken, even the approving authority was not apprised with the fact, and even the approving authority did not take any heed to know whether the return has been filed or not. It means that the notice has been issued just by having the information and triggering the assessment proceedings. So the whole assessment proceedings, the whole approval process is mechanical, and the assessment proceedings are liable to be quashed only on this basis. Friends, this is a classic case when the reopening is done on the incorrect facts. There may be 100 of the reasons of incorrect facts, like we see that in the present scenario, the notices are coming alleging that the assessee has made bogus purchases, while there is no bogus purchases. The assessee has made sales to those parties. The allegations are made the assessee has taken the loan, while the assessee has not taken the loan, the assessee has given the loans. So all these cases are covered by this case, and the assessee can take a plea that the notice has been issued on incorrect facts. At the end of this video, once again I am repeating the name of the case. The name of the case is Income Tax Officer versus Taj Land Developers and Promoters Private Limited, and this case is reported in 128 ITR Tribunal at page number 167, and the date of the judgment is 22nd September 2025. Thank you, friends.